Uganda's debt burden has more than doubled in the past decade, largely driven by extensive infrastructure development projects and external borrowing. While the government maintains that this spending is crucial for economic growth, experts warn that the country is walking a dangerous tightrope as the cost of servicing the debt continues to rise. The government is expected to allocate more than 300 million its revenue this year to repaying loans funds that could otherwise be invested in further infrastructure development. Details in this report.
Uganda's debt burden has more than doubled in just over a decade. This has been fueled by massive infrastructure development projects and external borrowing. The government insists that the spending is necessary.
Debt of Uganda is not only sustainable, but it's well managed. That's why we are having all of the numbers reported transparently in our debt sustainability report.
Economists warn the country is walking a dangerous tightrope as the cost of servicing the debt continues to rise. This year alone, the government will spend more than 30% of its revenue to pay back loans, money that could build hospitals or hire more teachers.
For the last 5 years, we have spent 430 billion Ugandan shillings on commitment fees. Commitment fees is a fine you pay for not utilizing the debt you contracted. Also, the way it affects us is that the government is borrowing so much domestically. So you'll have that's why our interest rates in this country are in double digit.
For every Ugandan, the impact is real. Fewer drugs in hospitals, delays in teacher salaries, and a growing fear that the economy is on the edge. Uganda is walking on a tightrope, investing in growth while trying to keep creditors at bay. But as repayment deadlines loom, the pressure is building, not just on the government, but on the people footing the bills. The government says it is committed to responsible borrowing, but also plans to step up domestic revenue collections.
We want every Ugandan to get into the tax register. And you pay that small bit we are supposed to pay. And then at the end of the day, we'll find that everybody has paid and we have collected more revenue without impacting so much, without the tax burden falling on a few people. Then secondly, we are also reducing the borrowing and mainly constrain it and target it to the key infrastructure projects which are going to return money.
While economic analysts urge greater investment in revenue-generating sectors like agriculture, tourism and digital innovation, Uganda is betting big on its emerging oil and gas sector to help the economy recover.